Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at some longer Forex charts, in particular the EURGBP, because this is quite topical at the moment with all the discussions going on with Brexit between us and Europe. But as usual, we have to start with a risk disclaimer. And just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will unfold. No matter what trading approach you do, there always will be losing trades. Right, so this is a 4-hourly chart of the EURGBP. So how does MTPredictor work? You can see we have some automatic setups on our charts here. So do we just take these setups blind, say perhaps in conjunction with our MTP trend direction, which is blue for up, black for in the process of making a reversal, or red for down, or do we do something different? Well, we do something different, and the reason for this is because we understand that markets are cyclical. In other words, about half the time they're random. So if I scroll back a bit, the markets are very difficult to ascertain their larger degree trend direction. So of course the question then arises, if markets are random about half the time, how do you know whether the market is in a good phase or a clear phase? Well, for this we go to the higher time frame chart, and I'll use this as an example. So a higher time frame is a time frame between 3 and 5 time frames higher. So say you're on a 3-minute US index chart, the higher time frame would be 15 minutes. If you're say trading daily stocks, the higher time frame would be weekly, and here we're on a 4-hourly chart. The next logical higher time frame would either be the 8-hour or more likely the daily chart. So let's go out to the daily chart. So I just want to show you what we do on this. I just want to use our training mode to go back a week or so, and I want to go back to basically around about here somewhere. So what do we do? Well, basically we go to the previous pivots and we describe how to, or we teach how to do this in more detail in our training webinars on which pivots to choose. But here is the last pivot, the last swing into the low. So we right mouse click here, we do decision point, and can you see, oops, missed it. We do decision point. Hang on a second, I need to go forward a bar, there we go. I can right mouse click and I do decision point. There it is. Sorry, my mouse wasn't going very well there. And can you see how it's on the chart in advance? This is where the market is. It's on the chart before the market even gets there. So it gives you an area of possible resistance. We're not forecasting it's going to go there, but what we are is prepared in advance if it gets there. I'll just turn trading mode off. You can see that it did go to there quite nicely. But how we use this is when we come down to the time frame we're trading off, we look to see whether the market makes a meaningful reversal at that level. In other words, is it doing what we anticipate? And in this case, you see it caught the high very nicely. So there was the high anticipated. We had a VS sell at our higher time frame DP. So we right mouse click off our red sell bar, do analysis, and this gives us our potential trade setup. Our MTP trend had gone from blue to grey at the time to show us also that we're in the process of making a reversal. So everything was coming together to give us a clear picture. And this is the position at the moment. The market hasn't quite reached its first target. If it had, that's where a profit would be of approximately 3.7R, or 3.7 times the initial risk. If the market had gone and stopped you out, the correct position sizing here would have kept your risk under 2% of a sample $20,000 account. You can have different account sizes if you want as well. That adjusts the number of contracts or lots or shares. And that would have been what we call a 1R or 1 risk unit loss. So that's, in other words, when the losses come through, our aim is to keep them small, but small in relation to the profits, which should be large, not just in dollar terms, but in relation to the losses. And you can see this trade hasn't quite worked out as anticipated, so it's quite a good one to look at. And we looked at this in one of our training webinars, and we suggested that because of all the Brexit chaos that's going on at the moment, once this trade got into the DP off this last pivot low, again we cover this in great detail in our training webinar, got into this area here, then it might have been a good idea to bring your stop to perhaps a couple of ticks above the bar highs, start trailing above the bar highs. If you had have done, you'd have been stopped out here for approximately 2.3 hour profit. So a small profit, but a good profit. And this was just common sense, particularly as our House of Commons were doing some indicative votes at this particular time, so there could have been a sharp swing in this particular currency cross rate. If we look back a bit further, I'll just go back to our daily chart as well. And there was also a pivot low there, and that came and gave us DP support at the bottom. And if I go back to the 4-hourly chart as well, you can see that again that caught the low quite nicely, with the 4-hourly chart making a meaningful reversal at higher time frame support. In this case, the VS buy setup went to the first target very nicely, where a profit of approximately 2.3R was available. For these other setups we have on the chart, you can see this history triangle here. You would have been avoiding this because our trend was up. It was up between this higher time frame support and higher time frame resistance, and also was against our MTP blue trend, so you wouldn't be considering that. And these buy setups here, again, you would be avoiding these because our MTP trend was red, and also the market was making a decline off our higher time frame support. Higher time frame resistance zone. So hopefully this is a good example to show how we use MTPredictor, with a recent example on the EURGBP. Again, what we're looking for is we're looking to go to the higher time frame chart, then place our higher time frame DP support and resistance zones on the higher time frame chart. Then when we come down to the lower time frame chart, which is the one you've chosen to trade off, then you look to see whether the market is making meaningful reversals at these levels, and then that gauges the large degree trends. You can either, if there's short-term setups at these levels like there is here, or for example if the market came down and perhaps come back up again and given you a sell setup here, still with a clear picture, then that would have been a good short trade to take. But the point being is that you use the DPs on the higher time frame chart to gauge whether the market is making a clear picture. If it's not, we then deem it's random, and you can see like here now, this is what's happening here. The market's basically gone into its random phase, and that's a time when you can't be doing any clear analysis at all. So a good recent example on a trade that actually hasn't worked out as anticipated, and it's important to show trades that don't always work out as anticipated, because that's real life in trading. Not everything works out as anticipated, but to show how this could be managed with the help of a shorter DP support zone into that level there.